Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me live from the MarketSite studio in Times Square, New York City, we have Paul Brody. He's the head of blockchain over at EY, and we're going to discuss the future of blockchain and how it has the potential to transform financial services, manufacturing, the public sector. Paul, it is great to finally meet you in person. Welcome to Trade Talks.
Thanks for having me.
Do organizations that move on the blockchain have better opportunities when we think about future growth?
Absolutely. So one of the things that we talk a lot to organizations about is blockchain is entering this mainstream adoption phase. And if the blockchain's mainstream adoption is similar to, say, enterprise networking or cell phones or personal computing, we're looking at about 15 to 20 years of 30% a year growth. And what that means is that $1 in revenue today is probably about $40 in 15 years' time. So it's a 40x growth opportunity over the next decade and a half.
When we take a look at digital assets, decentralized infrastructure, decentralized finance, does that have the opportunity to really transform the financial services industry as we know it today?
Absolutely. So I would say actually DeFi, I think ultimately all business-to-business transactions are candidates for transformation into smart contracts on public blockchains. But in particular, I think finance will be the first, because finance has already done a lot of the work to dematerialize assets. And now what we're doing is we're moving to the next generation of digital tools, which are so much more powerful.
How is blockchain being adopted by the manufacturing and public sectors?
So on the manufacturing side, manufacturing organizations, I think, are a bit more conservative. They want to know that this stuff will work before they start dealing with the money side. So what we're seeing is a couple of big priorities in manufacturing. Number one, inventory management, tracking and managing your inventory and assets over the blockchain. So what the beauty of inventory management is, it allows you to have more specificity over your data. You can keep track of stuff as it's moving through your network. You can see where it is 2 or 3 stops back in the supply chain. But you can also know that if somebody steals your, say, digital inventory tokens, they haven't actually stolen your stuff. So it's kind of a low-risk way to get in there. The other big use case that industrial companies are adopting is carbon traceability. So if I've created a digital token that represents a product, I can attach to a data or another digital token that represents the carbon offset or output of this product. And that's going to become increasingly important as governments say, okay, you can sell products that have no carbon footprint for a different price, or you may be subject to carbon taxes. So knowing exactly how much carbon is associated with each product is going to become very important.
When we think about the bigger picture, especially with these newer technologies, data privacy, scalability, those are 2 key concepts. How does cryptography help to advance that?
So the last 18 months have seen big step changes and improvements, especially in Ethereum, for both scalability and privacy. On the scalability side, the arrival of what are called layer 2 networks has been transformational. 18 months ago, you could look at Ethereum and say, that can do about 1 million transactions a day. That's not enough for anybody's usage. I got one supply chain client that's pumping out 2 million a day, so not useful. But today, we can see the ability of Ethereum with layer 2 networks to do a couple of 100 million transactions a day, and we can see a roadmap to tens of billions. So scalability has improved enormously with these layer 2 networks that are kind of a tool for summarizing and batching transactions. And then secondly, and I think the stuff we're really proud of at EY, is the work that we've done on privacy. We've built privacy tools that industrialize blockchain privacy and allow companies to transact on-chain, on a public blockchain with verifiable privacy. And that is transformational, because without that, you're not going to want to disclose or transact and show your competition what you're doing. With privacy, you can get all the benefits of blockchain without worrying that you're leaking sensitive data.
And to wrap up here, are we still in the early innings, or are these use cases actually being practically applied?
These use cases are being sort of sequentially industrialized. We're in early innings in the sense that the total market, addressable market, is still small, but we're surprisingly far down the road in terms of understanding what does the network architecture look like, who are likely to be the big winners. You know, Ethereum is a very good example. 18 months ago, people were like, oh, we're going to have a multi-chain future. That really doesn't look that way. Today, lots of blockchains have crashed and failed. Ethereum is still 80% of the public blockchain ecosystem. It's got the most mature infrastructure. So the big thing is, and it's worth looking at in terms of other technology industries, early leaders in the business got to hold on and enjoy that full 30% a year growth rate for 10 or 15 years. And what I tell a lot of our clients is, you need to act now, because being a leader at the beginning is the best way to ensure that you're a leader at the end.
That's a great point. Paul, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.